My question to you is this: is your realised rate of return strong enough for all the effort you put in? And if the answer to that is no, it could be better, then what I want to do is show you how I drove my practice from a focus on compliance to a focus on reliance. Does that make sense? I made 5 times the amount of money in half the time and had an awful lot more fun in that process. Who's interested in that? Get them up, get them up, get them up, get them up, get them up. Who's as excited as I am at the moment? Get them up, get them up, get them up, get them up, get them up. Good stuff. Let's move on. What I want to do is to take the good ones that I had, and we've all got good ones, agreed, and double their compliance fee in the first 12 months minimum. And I figured if I couldn't do that, I failed. And I want to show you today how I do that. Does that make sense? What I want to do with this client is I want to give them what I call an ideal first consultation. And the object of this being ideal is I get a second one, a third one, and a fourth one, and so forth. Fair enough? So I've got profit driver there. I've got the last 3 years of this guy's financial performance. The first question should be, how many periods can I put in here? The answer is 40. And that doesn't have to be years, they can be months, they can be quarters. In New Zealand they do bi-monthly GST reporting, so it's advantageous to set up bi-monthly periods. In Australia we do quarterly GST reporting. So my goal is to get every client onto analysing financial performance quarterly. But I'll always start with yearly because 1, it's easier, and 2, they're used to it. So before I teach them something new, I should at least start with what's there. What about the weakness? You probably see there's a stack of them. Receivables. I agree. 800, 1.2, 1 point. Can you see it? In fact, have a look at that. Sales are up 200. Receivables have grown what? 198? So of the additional 200,000, you've only collected 2K. So I'm selling a lot. I'm leaking through receivables. Let me ask you another question. What's the consequence of that? And when I click on analysis, I'm presented with 32 different graphical snapshot reports about the success in my client's business. The first report you have is key measures. And what this is 8 key drivers to give you a macro summary that you can drill more micro into. Let's take the first one. His profit 2 years ago was how much, guys? 11 point? I can tell you a lot in the cheap seats up the back are struggling with the numbers, aren't you? It's 11.59. Then it jumped to what? So I'm going to come to profitability. And I'm going to have a look here at my GP that's gone from 30% to 28 to 27. That's a red flag, is it not? I haven't been able to get that back in direct cost saving, so my EBIT is also taking a bath. Down here my net profit is taking a similar one after tax, after interest, and my retained earnings, which my clients know as their take-home pay, every $100 of sales, how much do they take home 2 years ago? So I got a $4.63 return out of every $100 of sales. Would you agree? Yes? 2 years later, what's a take-home earn? You know what he said to me? He said, I'm working harder for less. Try explaining that with that screen. You get nowhere. His working capital chart. My clients love this. None of them know what it is, they just love the little picture. What's that circle thing? Well, that circle thing tells you the number of days that you've got to wait from the moment you pay your supplier to the moment the customer pays you. 2 years ago, what was the figure? So correct me if I'm wrong, am I waiting 44 days longer to get paid in 2011 than I ever did in 2000 and? I'm starting to think that extra sales are a weakness, aren't you? I think that's causing 90% of your grief. My clients understand that green is good and red is not. So if something is red, our goal in partnership is to try to turn it green. Does that make sense? So here's a fact. His sales went up by how much, everyone? 5%. We saw that. He should have kept his growth in receivables at absolutely no higher than. It's a rule of thumb, isn't it? I'm going to grow a dollar, don't collect slower, collect quicker ideally, but at least at the same pace. Unfortunately, his receivables grew by. Hence, he's got a waste of. Does that make sense? What does 10% mean to a client? Nothing. Flick it to currency. That's 135k that should be in your bank account today that isn't, because of the way you're running your business, but is still recoverable. What you've got to do with a client is focus on what you can still fix. Agreed? I want to show you one report here. It's down in my reports. I want to ask you a question. Is anybody interested to know how I went from no engagements to 6 signed up engagements in 24 hours? Yes, no? Okay. There's a report here that I think is fantastic. It's down here in your analysis area. It is called Health Check. Where I was last period, where I am this period, what the difference is, and whether that difference is a strength in green or a weakness in red. I got 6 good clients. I fed them into Profit Driver. I come into here, went to Export Report, and export the Health Check as a PDF. Does that make sense? Then, too much, they turn off, you create little failures to implement them. So, let's summarise. 2 changes. If he doesn't make, he'll probably lose his business. By the way, it's secured in his house as well, so that's a threat. If he does make it, it's going to put potentially back into cash flow how much? Good or bad idea, guys? Yep. You must be sitting there thinking, how much will I bill him? You must. You are accountants. Is anyone not thinking, how much will I bill him? Then I want your advice. Do you think I should bill this on time or value? Value. We all agree? Then if you were me, how much would you bill him for this first consultation? And I'll give you a tip. Don't think I'll bill him this to do a second, third, fourth. Because if you don't do the first one right, who's to say you get a second, third, fourth? But this one has to be worth something, does it not? So run with your gut. What do you think will you pay? What would you pay me to show you how to put 250k back into your business that ain't there at the moment? How much?
$2,000.
Couple of thousand, I'm with you.
Yeah, 3,500.
3,500.
Yeah, but
How much?
yeah, about the same.
35? 35? 500? I love that better. Mark Holton, nice to meet you. 3,000.
I say about 5,000.
5?
10.
10? Mark Holton, nice to meet you more.
No, but it's my $250,000 that I'm going to see different. 10 grand is not.
Hey, did you cop that? You're already pocketed. She's not the accountant. That's a good thing. That's a good thing. How much was it?
I'll go with 10.
We haven't got round the end of the table. Behave yourself.
10.
10?
At least 5.
At least 5. See, that's interesting. I mean, if nothing else, there's 10 impressions of value-based billing here. Stephen McIntyre-Smith, what would you charge him?